Are we good to go?
Yes.
Thanks, Riddhi. Hello, everyone. This is Sana here. I'm extremely pleased to be the host for the next sort of 2 hours. Um, when Benita and I started thinking about, the topics that we would cover for today, um, one of them was, there are so many actuarial students who are just starting out and they want either some guidance or are thinking, you know what, this is so new for us. And immediately the thought that came to my mind was, I have been there. Despite my 18 years of experience, I have been there some 8 times now, where every few years when I changed my roles, I felt like I was in a new place, doing something new, or experiencing, new people. And it just I just wanted to share those experiences as part of the chat today. Over and above that, what we also have today is a great lineup of two additional speakers, industry stalwarts in um, the general insurance industry and then life insurance industry. So, just walking you through the flow of what's going to happen over the next couple of hours. I'll go in first, share my experiences. Then we'll have Adrian, who will talk through GI topics, topical things in GI. And then we'll have Avdesh, who will be talking about life insurance. Um, I'm very pleased that they could make time to talk to us. Saturdays are usually family time. And I'm thankful to all of you for making time to invest in your career and to listen to, whatever pieces of advice that we might have. Following the GI and the life insurance heavy-ish topics, we'll have a quick fun round for the speakers to see if they have any funny bones in them. And post that, we will invite everybody to send in their questions, keep sending in questions, and then but we'll address them towards the end. Finally, we'll have hopefully the president joining us as she will provide a word of thanks to our speakers and to all of you for investing time in your careers. Maybe I'll start with my own introduction. I'm Sana Konnur. I'm a qualified PNC actuary with over 18 years of experience, having worked in the industry as well as in consulting firms in India, in UK, and most recently in Australia. I am extremely pleased to be welcoming all of you and starting open this Saturday summit. If you could move to the next slide, please, Rithi. As promised, Sana's adventures. So these are more like just slapped on, my CV there. But, as I speak about it, you'll probably realize that, if you're thinking that, actuarial science, it's a new field for me, I don't know what to do, I don't know where to go, and, I'm feeling very new here or very green. Hence the green font. I'll tell you one thing that in all of these roles over my 18 years, I've felt green many, many times. And I'll start from the start, maybe not when I was born, but um, the start of my journey. I had thought when I was in grade 9, I used to think I would become a doctor. And then, however, that didn't happen. And I embarked upon the actuarial career almost by accident. Back then, I was confused about what I wanted to do next, and my early years, I used to think like the very first year of, starting to take exams, which paper to take first of all, and all that. I used to think I'll do two papers, I'll get 25,000 rupees salary, and that'll be it, two and done. Obviously, these were times when I was just doing my diploma in actuarial science in SNDT, in fact, and had just started learning about the field of the profession of actuarial science. Um, and then obviously after that I didn't stop at two, thank God. And I'm glad for it. I then moved on to, clearing more exams. However, again, it's something that all of you must bear in the back of your mind. Um, I didn't learn the exam techniques until the very last two papers. So bad on my part. And as a result, I've had those experiences where I've, woken up in the middle of the night to check my result and been disheartened. At the same time, there have been papers where I thought that I wouldn't pass and I have passed, and quite happily so. Um, so what I'm trying to do through this conversation, through talking about my own experiences, is to make it real for all of you. That you may face some of these things. Maybe you are all too bright, given how dedicated you are on a Saturday morning to spend time with us, and maybe you won't face those things. But I think one learning there is a technique to passing exams, and within that, I would say the one thing that really worked for me for my last two papers, where I finally cracked the learning, the cracking of exams, was actually exam practice. Maybe I'll speak about it a little bit more after I finish talking you through my 18 years of my life. Um, I've done everything that one should or shouldn't do, because I've taken a break from work, concentrated on papers. I've taken a break from papers and concentrated on work. And but I'm glad that I passed my exams. But the only thing I miss is that once I became a qualified actuary, I did not I did not immediately start like a CIRA course or something like that. And now I'm finding it a little bit tough to get back into the study wagon. I've had conversations with Avdesh and with Adrian, actually, in different instances where we've spoken about, forming a study group together and doing something about it. Again, something that I'd like to cover towards the end of my chat now. Um, so I'd also like to add, like when I was just starting out, I met my very first actuary in flesh, the very first Indian actuary, Indian female actuary, and we had invited her over as a guest speaker. And for me, that's like one of those early memories of really idolizing a qualified actuary, as if they were very different people. To me, back then, it was quite a big deal. Um, Speaking through, my career, I started out in pensions. My very first role was with K. Pandit. They are the oldest boutique actuarial consulting firm in India. Hundreds of years of experience of legacy behind them. And I remember my interview still. If and I say this not very proudly, but I say this very often, that if I was to interview today, when you guys, along with your cohort, I wouldn't crack an interview, because I went there and I very honestly said to Mr. Pandit that I'm just testing waters. He said, why do you want to join pensions? And I said, I'm just testing waters, sir. It's a mistake that I made. However, they probably liked my honesty, and they took me on board. I then went on to become quite a significant part of that consulting firm. But what I'd like to say there to you all is, do not follow what I did, and perhaps um, uh, you know know what fields you want to go into, or think through your interviews. I hope that the next two segments, where we are talking about general insurance and life insurance, will give you a little bit more of an idea of what life insurance products there are, what and general insurance products, what actuaries do in those areas, and it'll give you a little bit of don't answer like I did. Maybe is the tip I'd give there. I then moved on to, I worked there for 2 years, and like I promised you, came my break. I said, you know what, I'm not passing exams. I'm going to take a break from working, and I'm going to pass some exams. I cleared my CT series and then said, now what do I do? And back then it was called CT series. I think the papers are called slightly different names now. I moved on to HDFC Ergo, which is a general insurance company in India. Here, so where K. Pandit was a boutique consulting firm. It felt like a family. HDFC Ergo was suddenly a very big world for me. The first time the first time in a general insurance company, the first time in a very large insurance sort of a setup for me. Um, One of the things that was happening around this time, and you will, through my last 18 years, you'll also get to know a little bit of the evolution of, at least because I chose general insurance from this point on, you will also get to know a little bit of the evolution of insurance in India and the rest of the world. But this was the time where de-tarification was happening. So it was a very exciting time for any actuary, in particularly in the general insurance companies, where there was a lot of work happening on pricing. Reserving models were getting tightened up, and Ergo, our JV partner back then, was also quite instrumental in trying to get gold standard practices across the companies that they had jointly gone out with in various regions. And we had a symposium where we went to Germany and worked with actuaries from Germany, Milan, and us from India. It was a very exciting, general insurance time for general insurance, as well as, for me as starting out in a general insurance setup. After this, I moved to the UK, and I joined a company called Ageas Insurance. This is in an area called Southampton, very, very, very down south from London even. Um, this was another, and this was where, I was sort of consolidating my learnings of general insurance. But the newness here now was, it was a very different geography for me. The Every geography comes with its own, regulations and terminology. And I remember the very first time somebody, and it's almost like, hello, how are you? Somebody asked me, are you all right? And when they asked me that, I thought they could see on my face that I was scared and nervous, and I almost broke down. But for me, that's that memory of, being green uh, in my almost my fifth, sixth year of experience when I was at Ageas. Um, at Aegeus again, and this is probably common more for the European regions, but there was a very big change coming in the you could say regulatory statutory change, and that was around Solvency II. Again, a great experience of how uh, teams come together when it's a change that will affect, the actuarial team, the underwriting team, the pricing team, the capital team within the actuarial team, and so on. Again, a large effort, a huge project team was set up to accommodate the changes that were rolled out as part of Solvency II regime for general insurance companies. I hope you're taking notes of some of these terms, because they are all sort of pillars of, things that have happened in the past, around the evolution of either regulations around insurance or statutory things around insurance. We may even cover, why these things are important as well later during the sessions. Um, um, at this point, around 2 to 3 years with Ageas, I decided to change my roles. And I'd like to share a very personal story about my next pit stop at. So Canopia's managing agents, you may all know that, like the mecca of insurance is actually in the Lloyd's of London, and where almost the first insurance policy started, and so on. Canopias are a managing agents. They are one of the they are managing agents for certain syndicates, and that's how it works in that Lloyd's of London building. The personal story there is, even when I was a little girl, my mum my mom used to say, my mom's from a very small town in Gujarat. Even we grew up in a very small town. But my mom would always say, uh, my daughter will work in London. And to me, that's why Canopius, that role in Canopius was very, very special because that was, me working in Lloyd's of London. Um, Again, there was a difference because the way insurance companies, domestic insurance companies in the UK work is very different to how these syndicates work. And there are slightly different concepts with how managing agents operate syndicates in this Lloyd's of London environment. You may even read about it when you do some of your course studies. And when I had read about it, it didn't come to life as much as when I went to London and worked for Canopius. Around this time, there were personal changes in my life, and I moved back to India. And this was working with PwC, a magnificent firm at the time, and I was working from PwC, Mumbai's offices in Mumbai for the UK. So I continued to delve on my UK experience, but working out of Bombay. Um, excellent experience again. This was my first foray into consulting world, and consultants have a slightly different experience and exposure, and um, um, consulting world. So the role the consultants will play is they don't actually operate in the insurance company, but they assist insurance companies or any other financial institutions and so on. But so for example, one of the things that we did from PwC was we would help out in audits of insurance companies. And that was a very exciting time because um, if you're in an insurance company, you know the workings in and out of that company. But as a consultant, you end up working for more than one client, and you know ins and outs of those many clients. So pros and cons of working in consulting versus working in a direct insurance company, also working in India versus working overseas, working in the UK domestic market versus working in the Lloyd's of London. Um, post, sorry, post this, after a good, again, 3, 4 years with PwC, I moved on to the Indian insurance industry. This was my second stint in the Indian insurance industry. But when I had, like, if I compare myself as a almost fresher starting out in the GI industry, those many years ago with HDFC Ergo, with SBI General, it was different. I joined them as a head actuary. It felt like there was a lot of responsibility that came with the role, and an excellent time again for the Indian industry at that time because there were a lot of file and use guidelines. And there was a lot of importance and focus given to product filing. Towards the end of my tenure with SBI General, COVID struck, which was again, obviously, it was a difficult time for a lot of people and things like that. But um, it was also for an actuary, it was a once in a year event, and we were all trying to estimate, what a catastrophe that was and how claims would develop. And it was a very interesting case study from that case study point of view and from that intrigue point of view. um, After this, I moved to another consulting firm after about 3 years in the Indian industry. I moved to another consulting firm, EYGDS. And from EYGDS in Bangalore, I was working for the Australian geography. It piqued my interest so much that I actually ended up moving to Australia 3 years ago. And uh, when I moved to Australia, another sort of landmark time for insurance industry. So I was working for Suncorp Insurance in Sydney, and 2022 was when I joined this company. And here there was a huge landmark, implementation of IFRS 17 taking place at the time. Um, uh, Again, like I said, like Solvency II was a very big regulatory regime change. IFRS 17 implementation was a very big accounting standard change. And because actuaries play such an important and integral part of, general insurance or life insurance companies, when such big accounting regulatory changes happen, we are we are sort of in the middle of it all. And like if you think about the balance sheet of a general insurance company, uh, one of the biggest numbers that stand out there is reserves, and actuaries play a very big role in calculating those reserves. Actuaries also play a very big role in another reserve, but that is an asset, and that is in relation to premiums. But we'll hear more about it from Adrian, who'll be covering general insurance. Um, and that was like my Suncorp and Sydney sort of time, where um, uh, like one of the biggest things I felt and I faced and I enjoyed was the IFRS 17 implementation. Hope you're taking notes of some of these terms. Look them up, and all of them will stand out as those landmark sort of events in anybody's career. The last stop, which is my current stop, EYGDS, back to base, um, back to EYGDS. I'm now currently still working for the Australian geography. At this point in time, we are supporting clients with other implementations, advancing of their systems and digitalizations. My eyes next are on the US geography, so that I can say truly, there's nothing, there's no stone unturned, no road untraveled. I'd like to now say a couple of things, just from my own experience. I'll say through all of this, maybe you would have already gathered. Rithi, if we could go to the next slide. Um, there's fun in trying new things. There's fun in doing what I'm doing, like today, volunteering for the institute. Put your hand up for that. There's also one of the most important things that I found throughout my career that have helped me is being open to new ideas and learning to communicate better. With that, I'd now like to call upon Adrian, who has over 20 years of experience as a technical expert and team leader across global markets. He has had the opportunity to work for Australia's largest bank, a Big Four consulting firm, the largest reinsurer in the world, and is now the executive manager for actuarial valuation and data at Suncorp, one of the largest insurance companies in Australia. His career has allowed him to live and work in Australia, the UK, and Germany. In his spare time, Adrian enjoys playing the piano and has recently started playing baseball locally. Welcome, Adrian. I know it's really late for you, and I thank you for gracing this event today for our actuarial students.
That's all right, not too late. It's only 6:30 p.m. here in Sydney. So hello everyone. Maybe just back up one slide before I get to that one, Sana. Hello everyone, you wouldn't have seen or met me before. I'm Adrian, I'm an Australian actuary. So unless you've been to some of the actuaries events for the Australian Actuaries Institute, you may not have met me before. But I'll tell you a little bit about myself, my career so far, and then we'll move on to general insurance. So first of all, like Sana, my career has not been a planned one, even though that introduction sounds like it was all very logically planned, going from, you know, banking to consulting and then to reinsurance and then back to general insurance. Sounds like I was planning that all out. I didn't. Um, when I was in school, I didn't know what I wanted to do. I ended up doing a maths degree because I was good at maths and because they gave me a scholarship. And I thought money in university would be nice. Thank you very much. Um, so I didn't actually even know what an actuary was until second year university when I was trying to work out what I was going to do with this maths degree that I was studying. Was I going to be a maths teacher? Was I going to, work at the university? And I found out about actuarial and said, actually, that sounds really interesting and a challenge. So the challenge is really what brought me to the profession. I thought sounds good. So when I did my degree and qualified, I probably, like you, was looking around at all different types of opportunities. What kind of jobs can I apply for? And I actually ended up getting a job at a bank, not doing an actuarial role. So my first role was in financial planning as a graduate. So this was actually working in banks, in the actual branches, meeting with clients, developing individual financial plans for them based on their personal circumstances, and then presenting it to them and hopefully signing them up as clients. So it's a little bit different to the typical actuarial first year out of uni job, but it was really good to get that client facing aspect, which we don't often get in actuarial roles. So after that, I ended up at KPMG. I was with them 6.5 years. So I did my actuarial exams. And my tip for the exams is they're hard. The pass rate is not that high. Give them the respect that they deserve. So I worked my butt off to, to knock over the exams. Um, they are difficult exams. You heard from Sana about the techniques that you need. There's a lot to learn. And um, I found university less challenging, let's say, than the actuarial exams. So the maths degree I could kind of cruise through. Once I started doing the actuarial exams, I really had to do some work. But for me, the important thing was, I guess, having a goal at the end of that. And I had two goals. The first one's obviously you pass the exams, you get more money. That's always nice. But for me, what I wanted to do was when I qualified, I wanted to move over to London and not only see a bigger market and new job opportunities, that sort of stuff, but I wanted to explore Europe. So, really, just a personal ambition to see the world and see some new things. So, Australia's obviously a long way from Europe, and I hadn't really traveled around there very much. So, once I did qualify, I moved over there and I stayed with KPMG. They had a role for me over there, which was fortunate. And I worked with them for a couple of years more. And then after that, I ended up getting a job in Munich with Munich Re. So I did have some German language from high school, but I was far from fluent. So that was quite a bit of a culture shock moving over to Munich. And but it gave a lot of opportunities with it. And yeah, I think it's something that I wanted to do. I wanted to spend a bit more time in Europe. And when the job came available at Munich Re, it was an amazing opportunity that I couldn't really say no to. Not something you can really plan, but it's the way life happened. So from that, I ended up staying with Munich Re a bit over 9 years. And I won't go into all the details of that, but then it reached a point in my personal life when I had to decide, am I and my family going to live in Germany for the rest of our lives, or for the rest of our careers? And we decided actually to move home, which is back to Sydney. And I've got family here in Sydney, and we had two young kids, so they're now in school in Sydney, have been since 2019, and I now work for Suncorp and have done 6 years now. It's gone fast. So I thought I'd give you a bit of an overview of general insurance. I don't know how much you know. You may all be at different levels of knowledge in the industry. So thought I'd start with something which might be a little bit fun, and that's by showing a whole bunch of pictures of different types of insurance. And hopefully, if you get on the chat, you can give some answers as to what these things are. So I'm going to start with the top left one. Probably an easy one to guess the type of insurance. You might get a bonus point if you can actually guess the type and make of car. Does anyone want to get on the chat? Don't be shy. We're all friendly here. Oh, well, got the chats going. There we go. Sana's jumped in with the name of the car.
I said, put your hand up.
You got to be quick when Sana's in the room. She will jump in, snipe those answers. Yeah, car or motor insurance, and it is a Tata Nano. Yes. The next two, my personal home and luxury yacht. If you're lucky, one day I'll invite you to come on these. No, they're not mine. Hopefully one day. So, what do you think the next two are? And maybe if you can actually guess whose house this is. Property insurance. And Barney, yeah, that's right. In Mumbai, I believe, or Bombay. I've heard people from Mumbai/Bombay say both names, so I'm never quite sure which one to say. So I'll just say both. Yes, it is his house, property insurance. And the second one, everyone, well, it's obviously boat insurance. All right, the next one. It's a guy sitting down, holding his belly with a hard hat on. Okay, some of these ones, I'm not sure what's available in the Indian market. So some of these insurance types may not exist over there. Employer's liability, yeah. We have something called workers' compensation. Yep. So Gauri Srivastava has guessed workers' compensation. Yes, that's what we call it in Australia. So, but it really is the employer's liability. That's right. So if you get injured on the job and the employer has not provided a safe working environment, then you may be they may be liable, or your insurance may have to cover for that. Okay, next one. We have a kind of shadow figure in a. Yeah, that's right, Supna. Very quick. Cyber insurance. That's a new one. Cyber insurance hasn't existed that long, as you can imagine. All right, I'm going to jump down to the next row where you can see two kind of foreboding figures. One with a gavel and, oh no, they both got gavels. One of them's pointing at you. Legal insurance. Yes. Yes. They get all kind of Suits is the next one, Tane. Jumping the gun. But yes, that is actually Suits, the TV show. And that next one, maybe you can guess what Suits is trying to cover. It's not actually trying to cover legal. Harvey Scepter. Yes. So this one's trying to cover professional indemnity. So this is making sure that everyone's doing the right thing from their job as well. So that can cover things like medical malpractice as well. It's a special type, or if people are doing the right thing in their jobs. Okay, the next one, we have another ship. This one looks like a certain type of ship. Does anyone want to guess what I'm trying to get at with this picture? Marine. Yes, maritime or marine insurance. Hull, cargo, that's all covered. They're different types of marine insurance. That's right. Yes, very good. So all the shipping of goods, basically, and the actual coverage for the boats and everything on them. Okay, the next two are concerts. So the question for this one is, who are these people? And what's the insurance type? Event insurance. Yes, that's what I'm trying to get at here. And who are the people in the pictures? Coldplay. That's right. I think that Coldplay actually just toured India recently. And Sana, of course, your daughter's a Swiftie. Yes, actually saw Coldplay play live in Sydney recently. They were awesome. So if you get a chance to see them while they're touring India, I highly recommend. Okay, next one. Next one across. It is event insurance. And we're not up to that one yet, Sutma. I know you're keen. That's good. It's good that you're keen. So next one is space. Yes, and further question to that, does anyone recognize this rocket? So space insurance is not actually something that gets covered too much in Australia, but we did see quite a bit of it in Munich Re, because at the higher levels, you're covering up these big things. SpaceX is correct. Elon insurance. Tesla actually have their own insurance as well, and it's not called Elon insurance. I don't think. Yeah, I think that might come under professional indemnity. Watching out for what Elon might say next. Okay, so the next three, I've got a couple of celebrities, and this is some special type of insurance. There is no such thing as David Beckham insurance, but maybe you can guess why I've got these three pictures. Yes, D&O cover. That's right. We do have Shane Warne. You are close, Fischel. It's not leg insurance. He insured his wrist. So these three people, I've heard David Beckham and Shane Warne. Maybe you don't know the lady above Shane Warne, but they all insured different parts of their body on the Lloyd's market. So they're all celebrities. Sunny, you know Kylie. Yes. No, it's not Madonna. She's Kylie Minogue. She's a famous Australian singer. She's very popular in the UK as well. So Beckham insured his foot for a whole load of money when he was doing very well as a football player. Shane Warne insured his wrist. And Kylie Minogue, being a singer, maybe you can guess what body part she tried to insure. Lips. No, actually, no, not her voice, believe it or not. No, no, she actually insured her butt. So there you go. Insuring through the Lloyd's market in case she had some sort of accident, I guess. The footballer is David Beckham. All right, so what am I getting at with this? I guess general insurance covers a lot of different stuff. It's basically every type of insurance you can think of that's not life and health. So that's property, motor, caravan, boat, travel, motor liability, workers' comp, PI, professional indemnity, public liability, directors and officers, business interruption, marine, trade credit, political risk, aviation, cyber, space, events, movies, London market, Shane Warne's fingers, absolutely anything you can think of. All right, shall we go to the next slide, Sana? So, what is the big reason that we get insurance, especially on our house? Well, it's going to be to protect ourselves from. Yes, Sunny, that's right. I think I said that. Maybe you missed it, but that's correct. So, examples of natural perils that you want to protect yourself against. So we have 7 different ones here, and what I'm going to ask for this one is, what is the natural peril, and where is this picture? So there's a couple here that may be more challenging than others. So the first one is a wildfire or a bushfire. or a fire. And yes, it's the recent California ones. That's right. I think that was a Jewish synagogue that got burnt. That's right. That's the recent LA wildfires. All right, the next one. Looking very wet. Flood insurance is what covers it. So yes, it's a flood. These can actually happen from cyclones as well. So cyclones and hurricanes bring a whole load of water. There can be lots of things that can actually cause the flood. And this photo, you probably don't recognize it. I don't think. I think most people would recognize it, but this is actually in Australia. It's in Queensland. Recently, we've had some pretty big floods. All right, next natural peril, the third from the left up the top, with lots of different people and also quite a bit of water. What do you think might have caused this? Heavy rain? It's a good guess. I think heavy rain's kind of right. It is monsoonal rains. And yes, it is India, official. This is a picture after monsoonal rains. So I'll pay that. I reckon that's right. I don't know if it's Kerala. It might be Kerala. It's somewhere in India. I didn't look into the source of the picture in that much detail. Okay, next one. Last one at the top row. What do you think this might be? And where? Yes, volcanic eruption. That's right. Can you guess where this might be? Italy is a good guess. This one is not Italy. So it's not Vesuvius. It's not Pompeii. We didn't have photos of Pompeii, unfortunately. Japan, also a good guess. No, it's not Mount Fuji. Don't think Mount Fuji is actually active, is it? I'm not sure. New Zealand does have lots of a few volcanoes, but no, I'm going to jump in on this one. This is actually in Iceland, up up between Europe and North America. And the reason this one was a very interesting event is when it happened, it covered quite a lot of Europe in an ash cloud, which meant for some time all the flights were cancelled. So all travel insurance was highly affected by this volcanic eruption. All right, the next one. First one on the bottom left. This is a very famous picture. You might be able to guess what it is. Sewage waste. I'm not sure sewage waste is a natural peril. Maybe it could be if it damaged the pipes or something like that. Yes, this is earthquake's kind of correct. It was the earthquake that triggered the tsunami. And where do you think this picture might be taken? Chennai? No, it is Japan. That's right. This is Japan. So it was a very famous picture because the ship got taken many, many kilometers inland. And this is actually a town where the ship ended up. It's nowhere near the coast, but there was lots of damage from the earthquake and resulting tsunami. And that was back 2011 or 12. That's the big earthquake that caused the Fukushima nuclear incident. Okay, next one. Middle of the bottom row. Yes, it is an earthquake. That was very fast. You got to have quick fingers to get the answer on this one. Can anyone guess where this lovely photo is from? It does look like the UK. Thankfully, the UK doesn't get too many big earthquakes. Could be the US. Yeah, it's not the US. Could be, judging by the architecture. So this is actually in Christchurch in New Zealand. So New Zealand during World War II, that wouldn't be an earthquake. That would be a bomb. Also not natural. But this is actually New Zealand. This is Christchurch. There were 3 big earthquakes back in the early 2010s, and the city of Christchurch was actually damaged very heavily. And this is also a very famous picture from them. Okay, the last one. Before you guess that it's in America, because yes, it's a picture of America, maybe you can actually guess which one this is. Hurricane? It is a hurricane. Yes, not a cyclone because it's northern hemisphere. So this was a very famous insurance event. It's actually going back a bit. Gulf of America. We don't call it that over here in Australia or anywhere else in the world, I think, apart from America. This is Hurricane Katrina, which was at the time, I think it still might be the biggest insurance loss to have happened from a natural event. So it was a big event. So lots of interesting stuff that comes up in the insurance world. You find out about all these events and how to reserve for them, how to price for them. All right, shall we go to the next slide, Sana? That's the previous slide. Okay, wait a second. All right, and now we have something that no one ever planned for and was definitely not priced for in any ways. Yes, that's right, was or usually an exclusion. Okay, so when COVID happened, and obviously there were far-reaching impacts for COVID, apart from general insurance, with all the unfortunate loss of life and the shutdowns and the flights being cancelled and people not being able to move and all the issues that happened due to COVID. But I'm going to talk about the general insurance side. Now, Sun has actually told me that a lot of general insurance companies actually sell health insurance in India. So that's not the case in Australia, but different markets, different things. So some of the impacts that happened. Oh, CTP, I'll get to that. That's compulsory third party. So it's motor liability insurance, basically. So in Australia, we call motor motor damage, just motor, and CTP is the liability. So if you injure someone when you have a car accident. And you can just call me Adrian, don't call me sir. I haven't been knighted yet. Maybe one day, we'll see. So the impacts that happened as from COVID, well, we had lots of different things happening in investment markets. We had the government jumping in Australia, obviously in India as well, with all the flights being cancelled and other interventions that the governments around the world took. We had unemployment happen. We had changes in the yield curve and inflation, so all the investment markets. We had people closing their offices because people were not allowed to go into work, and the whole working from home thing happened. So what did that mean to us for insurance claims, general insurance claims in Australia? Well, firstly, travel insurance obviously got affected. Everyone's flights and trips got cancelled because you wouldn't be able to go to many places. Motor was a really interesting one. People weren't driving as much, which actually meant less accidents. So motor insurance did particularly well during the COVID period. Of course, yeah, just no one on the road, so they weren't crashing into each other. Home insurance actually got affected as well. So we saw a whole lot less burglaries than we would have normally because everyone was staying home. So it's very hard to break into a home where the family is already there. Some types of claims also were not as prevalent. So if you had, let's say, a water pipe in your house burst, normally that might flood your house. But if you're home, you notice it and you fix it. So it's very different to if you're at work when that happens. Workers' comp. So it changed the way workers' comp worked when people were working from home and perhaps not on site as much. Business interruption for all the offices that were closed and shops that were closed. Would that be covered by it? And then the whole trade credit thing, shipping was affected. What does that mean for businesses who are actually shipping goods to and from each other's? Stock market insurance. I'm just going to jump in on that question. Stock market insurance is called derivatives and things like that. You can put in put and call options. That's kind of an insurance on your shares. Landlord insurance and actually lender's mortgage insurance was impacted as well from that. All right, shall we move on to the next one? Okay, I'm not going to go into too much detail of this just because of time. But basically, when we price a whole load of insurance risks, there's often stuff that comes up that we're not expecting. So as an example, I'll go through these quickly. Many years ago, when insurance companies were insuring against things such as the Catholic Church or the Boy Scouts, they weren't expecting abuse claims to emerge. There's been a Royal Commission recently in Australia into abuse claims, and this has uncovered a whole load of liabilities and claims for the insurance industry. Asbestos is a big issue. I think it's still quite widely used in India, but it's particularly toxic to humans, and you may not actually get the disease called mesothelioma for 40 years after you've been exposed to it. So you actually get people who were exposed to these products ending up getting very sick, dying, and having claims against the company who's provided the product and the insurance company who is protecting them. So I've actually got a picture of Johnson's baby powder. So there was actually a few claims about a particular brand of their baby powder potentially causing cancer. But again, we call this a latent claim. You get exposed to it, and then many years in the future, you may have problems. The next one is a very interesting picture. You can see the guy with his hands like that, and they're all white from the tips up. So this is a condition that it's called, believe it or not, it's called white finger vibration. Don't know where they came up with that name. So this happens when you have people working with power tools excessively, basically. So if you're using jackhammers, particular power drills, it can damage the nerves in your fingers over many years. Drywall, similar. Yes, drywall is another one. The next one is, it's a picture of water being contaminated by gasoline. This happened in the US where you had petrol stations, actually the tanks in the petrol stations leaking into the groundwater and contaminating water supplies over many years. Okay, that big fire down the bottom left is the famous Grenfell fire in the UK, which is due to the cladding material that they put on the building. It was actually highly flammable. So when a small fire started, it went all the way up the side of the building and a big disaster happened. And as a result of this, there's been a whole load of investigation into the cladding that has been put into a whole bunch of different buildings. It's not a rig, that is an apartment building that was covered in this cladding that was actually, unfortunately, flammable. Okay, the next one is like your drywall, Sumia. I hope I said your name correctly. This is actually called leaky buildings in New Zealand. So it's basically if the water is seeping in and just actually damaging the building over many years. Next one is silicosis. So this is actually, it's not wood. This is silica. So if you had marble bench tops, that kind of thing for houses, and you go and the tradesmen go into your house and cut it to fit into your kitchen, then it spits out all this silica dust, which is not good for your lungs. It can cause problems. Can cause something called silicosis, but it doesn't happen for a few years as well. Next one is super fund. It's actually a bad thing. It's not super. So this is in the US what they call large environmental problem sites, whether there's some sort of industrial dumping or gasoline, toxic waste on the site. It can take many, many years to remediate and a lot of costs. And the last one, we don't know if this is a claim yet, but they're starting to build in loads and loads of new technology using nanotechnology, self-cleaning windows, all that kind of stuff. Really, really small particles, which we don't know how it affects humans. We need some experience on that. Nuclear waste would be a Superfund site if that happened. Yes, that would be like a toxic dumping. Nuclear waste tends to be not so much in terms of usually there's a whole load of regulations on how you have to handle the nuclear waste and where you should put it. The Superfund sites tend to be industrial dumping, things like that. I can elaborate a little bit on space insurance. It tends to be on launch. So if the asset explodes on launch, you might be covered. And actually the satellite insurance. So once it's launched into space. So it's basically a high value vehicle insurance, but you have the risk of launch failure and it blowing up whilst it's in transit. All right, next slide, Sana. Yeah, so say a launch fails. Yes, I'm not sure if that's covered if a spaceship damages some other country. What tends to happen is that a lot of it would burn up on re-entry anyway, and it would turn from a largish meteorite into a smallish meteorite. But it is possible that it hits something if that were to occur. So I thought I'd talk briefly about building an early career in GI. So like I said, my career was not really planned. It's just how things have occurred for me. But there are different areas that you could potentially work in. So the traditional areas, this might be something like pricing, trying to work out how much premium people should pay for the type of insurance, or the reserving, which is working out how much money you need to put aside for all the claims, which is where I work at the moment. You could be working in the capital department of a company. You could be working in reinsurance or investments or even in underwriting. And then there are emerging or growth areas. So examples of this might be in data analytics, in risk. More and more actuaries are getting into the risk space, or in climate change. And for an early career, what makes a good candidate? So we see a lot of very good candidates these days. And like Sana, I would say I was not a very good candidate, and I made a lot of mistakes in interviews. I'll tell you about them if we have time at the end. But good candidates, I would say, are the ones who are asking lots of questions and really look into the company that they're going to go and talk to and actually know a little bit about the company. and ask those kind of good questions. But the other thing we would be looking for would be, you know, the thought process. So trying to gauge how you approach problems. And the last thing is going to be a two-way street, I'd say, and that's the cultural fit. So actually making sure that you're going to be a good person that fits in well with the rest of the team. And that's going to be both ways. So it's, you know, you want to work for a company that you want to be a part of. I can elaborate a little bit on emerging growth areas. So data analytics, now that we have a whole load more data, and it continues to grow every year, we get more and more information about things. We can use analytics to improve our pricing, to improve what we're seeing from the business. So as an example, with better analytics, you might be able to assess natural events faster. So what we do at Suncorp now is after a flood or a cyclone happens or a hailstorm, we will send drones over the damage sites and try and map the damage to our insurance policies. Okay, should you go for consulting or anything else? This is a personal choice. Consulting is good for some people. It's not good for other people. You won't know till you try it, really. I would say keep an open mind for that one. And exams to be cleared for entry-level jobs will be that's kind of depends on the job. I can't answer that. So in some instances we've hired people for entry-level jobs who've not even finished their part ones, and other times we've hired people who are more experienced but may have been coming from a different background or different country. Okay, so my tips: yes, broaden your experience, be open to the new ideas, and try to collaborate and network with your peers as much as you can. Is GI expanding faster than life? I don't know the answer to that for India. I can say life insurance. I say it has certainly done so in the last 20 years in Australia. I know life insurance in Asia is still probably larger than general insurance. In all of Asia, I mean, not just India, but also all of Asia. And that's because of the amount of investment products that are also available through life insurance. And people use that for retirement savings. So in Australia, we differentiate between life and general insurance and something else which we call superannuation, which is for people's retirement savings. So general insurance covers a whole load of different things. All right, I think that's enough for me, Sana. We can always come back with more questions at the end.
Correct, and we'll take some more questions towards the end as well. So thank you,
Thank you.
Adrian.
Thank
That
you all
was
for your interaction. It makes it more fun when people are actually answering, and I don't have to answer all of them myself.
good that you knew the answers beforehand.
Yes.
But thank you, Adrian. That was an excellent presentation, a good overview of GI. You've definitely sold it to a lot of people here. We both love GI. And speaking of which, let's not leave life insurance behind. It's definitely a huge place of opportunities for a lot of you. And on cue, we have Avdesh here, who's our next speaker. Avdesh Gupta, a dear friend, is the appointed actuary at Bajaj Allianz Life Insurance. He joined the company in 2019 and is responsible for all actuarial aspects, which is pricing, product development, financial risk modeling, and valuations. A seasoned professional, Avdesh brings with him over 17 years of experience in the actuarial domain. Prior to joining Bajaj Allianz Life, Avdesh worked for PwC as a principal consultant in the actuarial services. In his earlier stints, he's also led multiple roles at Aegon Life Insurance, Swiss Re, and HSBC. Avdesh is a fellow of the Institute of Actuaries of India and IFOA UK, and he's completed his MSc in Actuarial Management from Cass Business School, London. Over to you, Avdesh, to talk us through, high level things to know about life insurance. Hopefully, we'll have a even balance between people being people knowing about GI and life, and probably liking both.
Thank you, Sana. You can hear me, Sana?
Yeah, very clearly.
Okay. Good afternoon, everyone. After hearing from two seasoned GI actuaries, hopefully I will be able to deliver a few of you in life insurance as well. So what I'm going to talk about is what are the different aspects that actuaries work in life insurance, what kind of products normally do we work under, and towards the end, I'll try to cover some of the key attributes that are required for life insurance actually to be successful in a life insurance company. Uh, Move ahead, please. Yeah. Uh, so what are the kind of questions we answer? And through this, I'm trying to cover different kind of products that are there in the life insurance space. Um, I'm guessing most of you must be aware about term insurance. Term insurance is typically a product in which you pay a premium for a certain period of time and you get a certain sum assured coverage, let's say for the entire policy term, in this example, 20 years. What a life insurance actually does, it decides and calculates what should be the premium I should be charging for that customer for an 18-year-old. We let's say buy a 1 crore cover for a 20-year term. So that's the kind of premium that actually calculates. Second example is typical of an endowment product where you are promising the customer that you will be paying the customer back 10 lakh rupees at the end of 20 years. So how much amount the customer should regularly save so that you're able to guarantee an amount of 10 lakh rupees. Second is an example of a pension product in which you have to pay 10,000 rupees per month to an annuity holder, and that is for his entire lifetime. What should be the amount of premium that the customer should pay to get this benefit? Every product that we have certain amount of profitability loaded in it. We need to return some amount to our shareholders as well who have put in their capital and funds in running of the company. So we need to understand, we need to compute and report to the shareholders what kind of profits we are going to earn from each of the policies that we're writing. The first three examples I'm talking about, what kind of work the pricing actually does. Second, fourth one is an example where a shareholder reporting person working in a shareholder reporting team will report to the shareholders. And third is a valuation actually. Now, all the policies that you sell is guaranteed for a certain amount. You guarantee either a sum assured, you guarantee either a lump sum benefit, you're either guaranteeing an income to the customer for a defined period of time. You need to reserve for those numbers as well. You need to uh, hold a certain amount of money in your balance sheet in order for you to be able to pay those claims and promises that you have given to the policyholder. So that's the kind of a work that a valuation actually does. Uh, Next slide. Now, what are the different functions in an actuarial team? I'll try and go clockwise. The first I just talked to you about is pricing of products. Now, pricing of products would mean to determine the premium uh, that the uh, that the company should charge from the policyholder in order to pay the promised benefits that we have given. Now, there are different aspects that go into pricing of a product. Life insurance, in fact, all the actual deal with probabilistic events. So I think when you're pricing a product, what are the different assumptions that you're making in the future? You're making an assumption about of death rate, mortality of future, what kind of mortality you would expect from the customer base to which you're selling the product. If you're selling a regular premium policy, you want to know that how many people will continue to pay the premiums to you. How many people will surrender the policies? How many people will lapse the policies? So because you're not certain that everybody will keep on paying the premiums. That's another assumption. Second assumption is you are selling a guaranteed benefit to the customer in certain products. So what is the investment return you're expected to earn from the assets? Now, when we talk about investment return, uh, we we invest the money that we receive from the policy into certain assets. These assets could be bonds, corporate bonds, it could be cash, it could be equities, it could be other credit instruments, it could be AIF, it could be property, so on and so forth. But what you have to estimate is what kind of return that you can get from your assets. Now, mind you, life insurance is different from different from the other banking products, because even banks offer you an FD rate, an RD rate, right? Banks, the corporate bonds offer you a certain amount of return. G-Secs also offer a certain amount of return. What differentiates some of the life insurance products is the guarantee that we provide in our products. In an FD, you invest money today, you know what kind of return you would get. But let's say in a life insurance product, you have to get a certainty of the rates of the future premiums as well. So that's where reinvestment is also comes into account, and that's an assumption that the customer that the company would have to make, that given the returns that we have today plus the returns that I can expect to earn from the future on an aggregate basis, what kind of returns I can make over the lifetime of the product. That's the interested assumption through which interested assumption is derived, and that's what you use in pricing the products. There are certain level of expenses and commissions and all those assumptions also you'll have to make in order to derive the right amount of price. Going to risk management next. Life insurance company faces a lot of risk, right? For example, the biggest risk would be the mortality risk. Second could be lapse risk, surrender risk. A lot of people stop paying the premium. A lot of people start surrendering a lot of policies. So those kind of risks are there, right? Who a risk management department within the life insurance company is normally headed by an actuary as well. So they work independently of the core actuarial function to understand what are the risks the company is facing and what kind of mitigation actions the company can make in order to mitigate those risks. For example, you face a lot of mortality risk. Can I reinsure a lot of my mortality risk outside? Can I buy some reinsurance bonds or insurance bonds from the capital markets? Um, for example, you have interest rate risk. Can I buy some derivatives? Can I hedge my interest rate risk through forwarded agreements or through derivatives? So this department is responsible to try to hedge or try to mitigate the various kind of risks that we are facing. Thirdly, talking about reserving for liabilities, again, we're selling a promise, we're selling a guaranteed amount, we're selling a certain amount of cash flows. You need to reserve for those liabilities, right? Somebody's paid 100 rupees of premium to you. How much amount of money you should keep aside in order for you to pay the future liabilities? I think that's again, this involves a lot of assumptions about the future, and said about mortality, interest rate, lapses, surrenders. But you need to be prudent here, because as a reserving actuary, the amount of money that you're keeping aside gives the certainty to your management, to your shareholders, that the money company is keeping enough money aside to in order to pay the future claims. So not a lot of, but a certain degree of prudence has to be there when you're reserving for your liabilities. Uh, Budgeting and planning. When you start the year, you make a plan about what kind of money, what kind of products you will sell, how much amount of profitability you will get from the products, and what kind of expenses you will incur. So you need to project the company's entire revenue count, the company's entire P&L and financial statements for the entire year. So the budgeting and planning actually takes care of that part as well. Lastly, I think profitability, which is whenever you're selling a policy, shareholders would want to know, okay, you've sold 10,000 policies this month. How much amount of profitability are you making from those policies? Uh, that's the work of a shareholder reporting actually. And when you've made a plan for the year, for example, you said that the profit margin from all the products that I will sell through the year is going to fetch me 5% profit margin. But when he actually sold the product, let's say this achieved only 2% profit margin. So the shareholder reporting actually will have to explain to the shareholders and why there is a deviation from what we planned against. Right. So that's what the profitability shareholder reporting actually does. This is sort of gives you an overview of different functions an actuarial team does. I think one of the arrows that's missing is probably is around modeling. What happens is whenever we project for cash flows in the future, it is done through a software that is maintained within the actuarial team. Different companies uses different softwares. So a modeling team is responsible for coding all the cash flows in the software. And the modeling team essentially makes the software that is used by all the different teams. For example, the pricing team would use the pricing software, a profitability team would use the reporting software, the valuation team would use the valuation software. So the modeling team is responsible for coding and projecting all the cash flows. And there are certain, because it's a long-term contract, about 40 to 50 years away, so a lot of cash flows need to be projected and coded into that software. So that's the role of a modeling actually that happens within the actual function. Next slide, please. Yeah. Okay. So I think you might be learning this concept in one of your subjects. I don't know which, I'm not able to recall which subject, but something called an actuarial control cycle is essentially a very important concept that we daily use. You might it might feel like it's a very boring topic, but it's a very important topic that life insurance actually, I'm sure a GI actually uses on a daily basis. Now, it starts with what is specifying the problem. Let's say, I'll take an example. My company is working on a product uh, that I want to have a term insurance product for the business professionals in the country. When I say business professionals, people who are other than salaried professionals, the shopkeepers, people who are have a business out business or a boutique or something. What kind of a product I can make for them, and what should be the price I should be charging for those set of customers. Now, India, what we say, is a very diverse country, and different cohorts and different customer cohorts experience a different kind of mortality. And it's very clear through our data. Then a salaried professional exhibits a very different mortality from a self-employed professional. Self-employed professional generally exhibits a slightly higher mortality. It could be a function of many things, but at a customer segment level, we observe that a self-employed population is exhibiting a higher mortality than a salaried population. So can I design a specific product meant for the self-employed population? So that's a problem that's been specified to you by, let's say, your sales team or your CEO. And now you have to develop a solution around it. How are you going to underwrite those customers? Will you get enough financial proof from those customers? Salaried professionals easily can provide you, salary slip, and you can financially underwrite those guys. But self-employed population normally don't have that much amount of financial documentation. Will you be able to financially underwrite those guys? What kind of medical test would you want to do on those set of customers? What kind of price eventually you want to charge, given the mortality experience, given the underwriting that you're requiring, given the financial underwriting, financial documents that you're collecting? So you based on these parameters, and importantly, will they be able to continue, because self-employed population has not a regular source of income. Sometimes their incomes are actually little sporadic, little volatile. Will they be able to pay the premium that is being promised? So will you have a higher lapses or higher senders from those populations? So those are the different attributes that differentiate different customer segments, and we develop a solution around it. And then third part is around monitoring experience. Now, monitoring experience is essentially you've made a lot of assumptions when you develop the product, when you price the product, and let's say 1 year down the line, how are those assumptions holding up? Are you experiencing something different or similar to what you actually started out with? And once you've collected a lot of experience, then it goes back either to change the problem or you go back and reprice the product. For example, you saw that the mortality experience is quite high, or it could be quite low. The financial underwriting is actually smoother than what you might see for a salary professional. So So a lot of things go back from monitoring experience to either to reprice the product or actually to change the problem in itself. And there are two boxes at the top at the bottom. First is the external environment. The external environment would be something around what kind of regulations are there in order for you to price the product. What kind of macroeconomic outlook you want to have when you're pricing the product, about interest rates, about different returns that you get from your assets, unemployment, and so on and so forth. Professionalism is obviously the bit around, the actuaries have a professional code of conduct. So what kind of professionalism are you be seen under when you're pricing a product? Are you actually professionally capable or capable enough to do the job that you've been asked to do? So those are the important things. I think the actual control cycle is a very important aspect in our actually anything that we start out with. Next slide, please. Yeah. So this one is saying that what are the key attributes that you need to have in order to be a successful life insurance actuary. Now, I'm sure some of this might be true for even a GI actuary, but I thought when I looked at my career, what are the key things uh, that actually I've seen in my experience and through other people that I've met? What are the key attributes that I see from a successful life insurance actuary? Firstly, I think uh, when we get into a jobs, we start working on simple cash flow understanding. Uh, Different kind of products, as I said, annuities, term insurance, endowment, unit link, participating business. Every line of business has a different kind of cash flows. So I think in the initial years, when you start out as a life insurance, actually, if one spends a lot of time in developing a very deep understanding of the cash flows, it really helps in the long run. And once you get to a level of senior actuary or an appointed actuary, then you don't need to look at the model for you to understand if I were to change this assumption, how much impact it would get into my profitability or my reserving. So in the initial days, one spends a lot of time in having a very solid understanding of the cash flows. When I say cash flows, how the different decrements happen, lapses, surrenders, mortality, how it changes the numbers. That kind of understanding really goes a long way. Second one, time management, multitasking. I think that's true for anyone who's working in the actual domain. When you get into a job, you will be working as well as studying, right? You will get your study days. You will get some time to study, but the work will be there as well. So I think time management is of utmost essence when you're working as an actuary, because your work will be there always. Sometimes work takes priority, and sometimes it has to. But you will have to clear exams as well in order to qualify and have a progression in your career. So time management and multitasking plays a very important role. Thirdly is on macroeconomics. I think because life insurance actuaries make a lot of long-term assumptions, especially on the asset side, interest rates, inflation, as I talked about, unemployment, maybe um, equity markets, where are they heading, maybe on a short-term basis or a medium-term basis. So a lot of a good understanding of a macroeconomic really helps you make sound judgments around the assumptions that you're making in the future. As I said, if you're promising a return to the customer after 20, 40 years, you do make a lot of assumption about what the macroeconomics factors would outplay in the future. So those a good understanding of the macroeconomics really clear goes a long way in making those sound assumptions about future. Next one is related understanding of assets. Uh, and actually is a life insurance actually is a good actuary who has a good understanding of the liabilities as well as assets. Liability means when I say understanding of the cash flows of what might go into when you're pricing a product. And assets is because every time you collect the premium, you invest in certain assets. A simultaneous understanding of assets as well as liability will play a very important role because for life insurance, you need to invest in assets which match your liabilities. So asset liability management also plays a very important role in financial assessment of the risk. So an actuary who has a very sound understanding of assets also is very good. Lastly, on effective communication, um, I think everyone that I meet, especially on people who are on non-actuarial domain, either your CEO or your sales or your finance team, they will call actuarial or actuaries a black box. When I say black box, it means we don't understand what's going inside the actuarial world, actuarial models. They don't know how to communicate. Uh, a life insurance actuary has to be an effective communicator. When I say communication, doesn't mean giving a very solid presentation. It's about being able to explain a lot of technical. Sorry, there's a noise in the background. Being able to explain a lot of technical know-how of your results of what you've done, what kind of modeling approach you've done to a non-technical audience. Because it's, let's say if a sales guy were to understand what kind of product, what kind of mix of business I got to write that will give me a profitability. That goes a long way in being, having a sales guy who is more effective and profit driven. So communication to sales as well as CEO in being able to explain things in a very simple manner and just dumbing it down for them goes a long way. So these are thought about the important attributes for being successful, at least in the life insurance space. So that's all I had.
Hey, thanks, Avdesh. Thank you. That was really useful and quite a comprehensive, like 101 on life insurance, really. Um, and again, I know you've got some personal commitments, but thank you for spending the time with us. I've got a quick fun activity actually planned for both you and Adrian. So, Riddhi, if you could help me, spotlight the two of them. Think on your feet. All right. So it's just something light and fun, so that the students here don't just think that we are very serious people, because we know we are not. So these are very quick, simple, this and that type questions. I'll give you two options, and you'll have to tell me which one you prefer and why. Um, I'll probably ask both of you, like I'll ask the question and then you can answer in turn. And as they say, choices make the man. First one, um, would you rather speak all languages fluently or talk to animals?
That's easy. Animals.
Don't want to talk to us humans.
Definitely animals. I think languages are covered by Google these days and all the apps that are out there. Whereas who wouldn't want to be able to speak to the animals and actually get their perspectives on things?
What
Yeah, same
about
for
you,
me. I have a
Avdesh?
dog at home. I have a dog at home. I wish I could speak his language. I think the second option for me as well.
Yeah, sometimes my children behave like animals, and I wish I had the power to talk to them. Okay, would you rather live without music or without television?
Television.
Without television.
This
But
is
TV can have music too, right?
yeah, but the television wouldn't have music as well, right? So no,
Yeah,
life without music would
I
be
know.
very dry, I think. But I think I'd be fine without television.
I think
Yeah, so
when I'm wired in, or let's say when I'm concentrating from on my work, I put on my headphones and get a good music in place. I think that really helps me, at least in my concentration. So music plays a very important role in terms of getting me when I'm anxious. It helps me calm down. It helps me concentrate in work as well. So I think music for me.
good.
I,
Which
I, I
of
think that sorry, I was going to
Hmm.
say I kind of joke that there are three universal languages in the world, and one of them is maths because maths, and that's great for actuaries, right? You can work anywhere because maths is universal.
Yeah.
second one is music, because it's
Yeah,
it's universal. A good song will be popular everywhere in the world.
correct, correct. Melody, yeah. Oh,
I'll see
sir.
if anyone wants to guess what I think the third one is. Get on the chat. What's the third universal language? Oh, Sana's guessed it. Have I told you this before? No.
No, you haven't.
Yes, it is. It is that.
English.
English.
Awesome, awesome, guys. Yes, and keep the answers coming, and we'll see who matches most with speaker. Um, all right. For the moment, I think you two are already quite similar. Um, no, I'm moving on to the next question, Tejashree. Um, would you rather be able to become invisible or be able to read minds?
I'd say read minds.
Uh-huh.
Think of the mischief you could get up to if you could read minds.
Yeah.
I mean, you could get up to mischief if you're invisible as well, but I think reading minds would be a lot better.
Only as long as others couldn't read mine. Good choice. And it seems like, it's quite a mixed crowd in our crowd. They want to be invisible and some want to read minds. Nice. Okay, the next one. Would you rather be stuck in an elevator with Jeff Bezos or Bill Gates?
And I know my answer, but I keep jumping in first, so I'm going to let Avdesh go first.
If you have to one of them, but actually, if you're asking a choice, probably Jeff Bezos. Yeah.
Oh, that's good, because I'd go Bill Gates.
Elon's not on the list.
So who's not on the list?
Elon Musk, because somebody from the audience has said Elon Musk always.
Yeah.
And why? Why?
I would pick Bill Gates because I'd want to hear about his charity work, not about his business stuff.
Mm-hmm.
And I don't know that Bezos. I don't know what Bezos does now. Does he do charity work?
He attended the Trump initiation.
I don't want to hear about that.
Oh, we can't start a political debate here. Even better still, right? You're going into the elevator, not invisible, but with, reading their minds.
Reading his minds. No, I'd want to know about his work because he's doing a lot of good stuff to try and cure diseases and things through the Bill Gates Foundation. I want to know about that.
Nice. Very, very, very interesting. Very interesting, sort of difference in opinion there. All right. Next one. Would you rather play video games or board games?
Board games. I've never been into video games.
Oh, I can't choose. Can I do both?
No, no, no.
Can't do both.
They saw that.
Oh, I'll go video games, even though it sounds antisocial, because you can play socially with video games as well. Though I do both, so
Yeah.
that's a really tough question for me.
So lots of fun times we've spent with Avdesh as a family, playing really amazing board games. So
I think because we end up fighting with each other all the time. That's what makes it interesting at the
yeah, you're a sore loser. You get beaten up. Alrighty, the next one then. Okay, would you rather have a cooking lesson with Gordon Ramsay or Nigella Lawson?
Ramsey is a bit of a hard nut, probably with him.
Oh, that's why, is it?
Yeah.
Yeah, I'd go with Gordon. I think he'd be a lot more entertaining.
Yeah.
Oh, really?
Yeah. I mean, he'd
Interesting.
probably get angry at me for
Yeah.
stuffing
I
everything
haven't had
up.
a scolding for a while now, so I think it'll be good to have some scolding for a while.
Awesome. Interesting answer, really. I was certain you were going to go the Nigella way because that's my choice.
I
Whoever
probably would
cooks
have gone
better
Jamie
mags.
Oliver if I had to.
The
But no,
15-minute meals.
yes.
Okay, good one. Would you rather wear mismatched socks to work or forget your phone at home?
It's not soft. I do that even today.
Sure.
Yeah,
You
the
can't live with
socks.
phone these days.
It's
Yeah.
very frustrating to leave the phone at
Phone at
home.
home. Indeed, indeed. Okay, last one. Uh, would you rather forget an anniversary or your child's birthday?
Anniversary.
Anniversary.
There's a smart one, Sneha Podar in the or not applicable. Yeah, makes sense, guys. And girls.
Yeah.
Both will end up. Good
Sleeping
responses
on the
from the
couch.
team. Both, that is the partner and the children, or you're talking about yourself there, Harsh?
I think
All
the
right.
first one, you sleep on the couch if you forget the anniversary. If you forget the child's birthday, then maybe they're on a psychiatric couch in therapy in
Indeed,
15
indeed.
years' time.
Yeah.
Indeed, indeed. All right. Um, I don't think there are any other questions remaining. I'm done with my fun bit. I'm happy to actually give 15 minutes back to every one of you. Thank you, everybody, for attending the session today. And thank you, Avdesh and Adrian, for being such great sports with my questions, as well as talking us through, both your careers as well as also your, concepts of GI and life insurance. Okay, one last question coming up, and that's it. We've got Gaurav asking, would you rather be an actuary or an underwriter?
Well, you can be both. So I know actually quite a lot of actuaries who've gone on to become underwriters.
It's not
Yeah.
so much in the life space. People do actually. My pricing actually has spent a couple of years in underwriting, but I think it's less common for an actuary to take an underwriter role full time. Uh, it's very not very common though.
Mm.
And
Thankfully, they didn't say.
yes, quite a few actuaries do go on to investment banking or
Yeah.
or risk
Yeah.
advisory. Can I? Yes.
Yeah. And good they didn't say undertaker, so that helps. You don't want to be that. We've got a few questions coming. If you're okay, although I've said thank you already, are you okay with a couple of questions?
Yeah.
Um, okay. Oh, you've picked up the investment banking or risk advisory firm. Can I see a career as an actuary in in investment banking and risk advisory firm? Oh, actually,
Uh,
it's a universal language.
Yeah. Well, I think there are the exams that you have, the specialization, some of the later exams does have a lot of investment related areas as well. So if you want to specialize in an investment actuary, you can go ahead for and do those exams. And
I think the
Thanks.
Sarah
way
is a
to look
yeah.
I think the way to look at it as well is the actuarial career path, or it gives you a skill set which you can apply to many different types of industries. So you can absolutely go into investment banking or normal banking with the skills that you've learned through university, and the actual exams, the specialist part 3 exams, um, do focus on particular industries like general insurance or life insurance, or you could even do superannuation in Australia. But
Correct.
the skill set that you have can open doors for you in other industries as well.
and other departments within insurance companies too, like CFO roles, CEO roles. And we have examples of that in India, and definitely we know of the CFO in Australia who's an actuary.
I think there's one question around, apart from clearing all the exactly exams,
Yes.
mastering. I can answer from the life insurance space. I think the softwares that we use are internal built software. So I don't think you would have those publicly available or separate course or certification you can do before joining the firm. But I think if you're doing R and Excel, you will get a maybe SQL as well or Python. You will get a flavor of at least becoming a modeling actuary who can code all the cash flows in a very efficient manner. That's one skill that will definitely help. But as I said, I think if you're needing help in cracking an interview or getting a start, I think a very good understanding on the cash flows really helps. I don't know what the exam is called, CT5. In my term, it used to be 105 or CT5. A very good sound understanding of that exam really helps.
I want to jump in on two of the other questions that have been done. So Deepak, you said I'm 24 and starting a career late. Is that a big issue? Definitely not in Australia. I assume it's not also in India. And 24 is not late. We've had many people start their careers much later than that. Second one, Corey said preparing for exams is enough for jobs, but facing interviews feels really scary. Can you advise what to do? Practice, 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 practice with your family, with friends. You can even get professional assistance in practicing your interview technique. That's the best way to learn how to present yourself better at interviews.
Is ERM still open to new opportunities for actuaries? Yes, I think ERM is an area which is opening up very recently in India. India is undergoing a regulatory change. We are moving to a more risk-based capital. The capital is the way of calculating capital is changing in India. It's going to come in force in the next couple of years. So risk-based capital is new. There will be risk-based supervisory as well. So ERM is definitely an area that a lot of actuaries are showing interest in. And this one slides risk management is a separate department in our company as well. So we have three people active working in that department. So the answer is yes. So it's a new upcoming area.
There's a question around, do companies offer study support, especially in Indian insurance companies? I think my experience would have been that most insurance companies, and I worked for two here, they did support actuarial exams. So many do. Yeah.
Many.
I think that's the same with Australia, Adrian.
Yeah, that's right. It may be different if you're working in a non-actuarial space. So say you're working as a claims technician, then they might not want to give you actuarial support for that. But definitely if you're working in an actuarial department in Australia, study support is pretty standard.
Tanishk is asking, is 1 crore salary a myth? Crores is a unit of currency here. So Avdesh, you want to answer that?
So I think it's about it's just like any field. If you are a very successful person, if you're very good at what you do, and if you are in that a top quartile guys, a very a good guy at what you do, you will earn big bucks. That's true for any. If you're in banking or underwriting or any other space, and even in operations, if you're good at what you do, you will get those big bucks. And if you're at a senior role, you will get the big bucks. And not everyone goes there. You have to be stand up. You have to stand up among the crowd.
Right. Scope of investment actuary in India. Any thoughts? Again, I think because it's India based.
Yes. So I think I haven't seen many actuaries. Let's say we have a investment function who is mostly with the CFAs. They tell us what kind of stocks to buy, what bonds to invest in. But if you're an investment actuary who has done investment specialization in the exams, I think you can become an ALM actually, asset liability management actually. You can work in the risk department area. You can work in the financial risk area. So you might not be working in the investment function, but within the actual function of the risk function, your knowledge of investment will definitely be put to good use.
Thanks for that, Avdesh. I think there are a couple around, just enhancing your skills in actuarial science. I think my own opinion there is be inquisitive. Try and reach out to your seniors in the team. Ask more questions. Do more self study as well. Things to add, Avdesh, Adrian, on that. How do you enhance your skills, actuarial skills?
Just try to get involved in more different tasks. So it's an early stage of your career. Be open to trying as many different things as you can and put your hand up for different tasks as they come available. Because you will learn things.
Yeah, I think similar answer even in your life insurance company, your different domains. If you try to get in your experience in all these domains at different points in your career, your skills definitely get added. Evaluation actually has a different skill set as a pricing actually. We end up doing both of them sometime in your career. Definitely on the right path.
Correct. I think one thing that I'd like to add here, especially on the skill set that you both answered, just one thing to add there is obviously AI is up and coming. It's going to be a disruptive force in the future. It's good to make yourselves aware of what that means, what that entails, because those tools are also becoming quite commonplace now, and how you would be able to use those tools can give you an added advantage as well. So uh, read up about it. Don't be lagging behind in keeping yourself updated on what's coming our way. Thoughts on AI, Adrian, Avdesh?
AI is going to cause a lot of disruption in a lot of different industries, but the people programming and actually having the thoughts and guiding the AI will be the later ones to go, I would say.
Yeah.
So I'd be more worried if I was in a job that could be easily automated. I don't think actuarial work can be that easily automated at this stage.
Yeah. I think AI can definitely aid in your work. It's not going to replace your work. The skill sets that you're acquiring through your career, through your exam, can't be replaced by an AI. But in your insurance company, definitely we are using an AI engine in various aspects. Not so much in actual as of now, but a lot of things we're using in the underwriting space, in the customer service space. In actual space, we are using it, but to the extent of making understanding the data or reading the data or interpreting the data a lot more efficient than what it was before AI came. But the way you're building your model, the cash flow understanding, that really can't be replaced by AI.
Can't be
It has to make
replaced.
your work efficient. Yeah.
Yeah. Extremely fair points. I feel like we are right at the end of the time that we had allotted for this, and it's getting late and late for you, Adrian. I thank you both for spending time with us today. I thank you all, the audience. Really useful interactions. I know some questions are pending. With the constraints of times, we'd like to close the discussion now. Some of them we can try and answer even offline.
Thank you,
you.
Sana, for being here, for your time, and thank you to the speakers for the information which you share. I'm sure it's very helpful for all our students. And yes, a big thanks to the students for making this event a huge success. Thank you. I think we
Thank you,
met.
Riddhi, for organizing.
Thank you so much.
Thank you all.
Thank you. Thank you all.
See you later. Have a good weekend.
Take
Yes,
care.
yes. Same to you. Thank you.